You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music can mean only one thing. It is Friday, 1 p.m. Central, 2 p.m. Eastern. It is time to view some volatility. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, we hope so at least these days, markets are pretty exciting, so we're trying to keep up. Options Insider Radio Network. Hope you guys are staying safe out there, and as importantly, staying sane out there. It can be trying when we're all locked up with our loved ones out there. Hopefully our content helping you get through this. If you just listen to Vol Views, if you haven't done so already, make sure you head on over to wherever you get this fine program. Could be iTunes, could be our website, could be our app, could be wherever you get it. Stitcher, Spotify, Google Podcasts, all of the above. YouTube, a growing number of you getting it there as well. Make sure you subscribe to the full network if you haven't done so already, because that'll get you everything. And these days, I think you want everything. At the very least, it'll keep you sane and occupied for a bit. And make sure wherever you listen, keep those questions, those comments coming in. Make sure if you like what you hear, leave a review so other people can continue to find this fine content here. And joining me to help me produce some fine volatility views for you today. First off, let's go out to the Carmen Line / Option Pit Global HQ, where we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian. Mr. Meatball, welcome back to the program. How are you doing? Are you staying sane in these trying times, sir? I'll take that your resounding answer as a yes, sir.
For sure.
There he is.
Sorry, I was muted. I know you're shocked. I was muted.
It is challenging in these quarantine times to unmute. I understand the challenges there. And then also join us. We got double duty holding down, splitting the MIAX hot seats. It might be a little bit snug for them. They might be fighting for space over there. First off, our old friend, Mr. SHELLY Brown, the executive vice president over there at MIAX. SHELLY, welcome back to Volatility Views, sir. There you are.
Sorry about that.
There you are.
Thanks for having me, Mark. Nice to be here. And no, I don't share seats with anyone. No one wants to sit next to me.
Yeah, especially not these days. Not these days. Sharing seats a little bit frowned upon. So hopefully the social distance being respected over there, as we are also joined on the other half of the socially distanced hot seat in MIAX land by Tom JARCK. He's the volatility product specialist, making a double appearance here. Tom, welcome back to the program to you as well.
How's everyone doing? Everything's good out here. I have one child on spring break. The other one's doing the homeschooling, but surviving here, surviving. I must say, I do miss people, though.
Yeah, my little guy told me the other day he actually missed school, which is a lot for him. So that says, I think, where we found ourselves in society right now. The kids actually want to go back to school. That's how bad it's getting out there. And also joining us to help us parse all this volatility madness that is going on this week, our guest co-host here, we've got ILYA FEYGIN, the managing director over there at WALLACHBETH Capital. ILYA, welcome back to Volatility Views, sir.
Thank you. Thank you for having me.
And ILYA, it has been quite some time since you've been on. In fact, you last joined us way back in March of 2017. That was back at the Risk Management Conference, so it has been some time. A lot's happened in the vol space. A lot's happened in the world since then. So a lot of new listeners have flocked to the program since then as well. So go ahead, really quickly, give our audience a quick overview of what it is you do and what it is you guys do over there at WALLACHBETH Capital.
Oh, in a nutshell, WALLACHBETH is an institutional broker-dealer, focused on options, other derivatives, and ETFs. We have a fairly significant ETF business. I focus pretty much on all the products. I look a lot at general investment strategy. I look at volatility and options, hedging, help some of our institutional clients in a number of ways, whether it's trade ideas or portfolio analysis, and certainly look a lot at products such as the ones you've mentioned, right? VIX, SPX, options on ETFs, futures, etc.
VIX and SPX, I don't know what you're talking about. I've never heard of either of those products. Maybe we'll see if we can discover them together, listeners, as we head on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review. This is indeed the portion of the program where we, surprise, review the week that was and indeed still is on the volatility trading and trending and analysis and unusual activity and all those fun perspectives. And we got another crazy one on our hands today, listeners, because the day people have rumored, have wished for, have hoped for, fingers crossed, may, quote unquote, may be here. Of course, talking about this explosive rally we're seeing on the heels of this potential treatment for the coronavirus. People have been rumoring, and we've talked about Gilead a lot on our option block program. A lot of unusual activity has been swirling about them for a while. People have been hoping this treatment they've been working on may indeed be effective. And it seems like in the initial blush, at least, that is indeed the case. The market's liking that, roaring off to the races last night in the after hours and looking fairly strong today, even though we've talked for a while about the quote-unquote cure rally. I'm not sure if this is exactly what we had in mind, because coming into showtime, we're seeing the NASDAQ up about 0.33%, so not exactly blowing the doors off. We got the S&P up about 1.5%, almost 1.6%, and we got the Dow up about 1.75%. So not quite the extremely trifurcated market like we saw yesterday, where they're all kind of moving in different directions throughout the day, but still moving in the same direction, just varying degrees today. And we got gold and oil selling off. Crude oil just taking it on the chin yet again. They're off. WTI at about an 18 handle now. If you want to dive deep into the vol and what the skew and term structure is saying out there, listeners, I encourage you. Check out TWIFO. It's hitting the network pretty much as we speak. Actually, it should have already been live up yesterday, I believe, actually. So check that out if you haven't done so already. If we go deep into all of the madness that's going on out there in the vol skew and everything else out there in WTI. And again, off another 9.25% today out there. So apparently the production cuts from OPEC, not exactly getting the job done. Hard to offset 30 million barrels per day loss of demand with 10 million barrels per day production cuts. The math doesn't seem to line up that way. Let's see what's lining up out in the vol space today, though. Coming at showtime, both Spikes and VIX Cash hovering right around a 39 handle. That puts them both down about 10 points from where they were last show. And, of course, there was no last show last week, so this is actually 2 weeks ago now that we're going back to here. And VVIX, a.k.a. the volatility of volatility, down a whopping 18 points from last show. It's still elevated, but getting back into the more, shall we say, sane elevated range around the 120s levels, or 127 right now, and down from the 160, 180 crazy town level that it was hitting and threatening not too long ago. But let's go back the opposite of the way we just came. Let's start with ILYA as our guest. ILYA, sir, it's been obviously a tumultuous couple of months here in the marketplace. What has been lighting up your tape over there at WALLACHBETH this past week, and what are you making about today's movement out there as well?
Well, I think the general environment's been very much driven by positioning in vol. We saw a very, very large short squeeze in March, heading up into March expiration, where some clearing firms failed. A huge squeeze in short vol, and then things kind of abated as some days passed by after March expiration, and there was much less of this gamma short and the short squeeze, and the markets calmed down. Vol has come in. We've seen a lot of activity in ETF options. Anything from spiders and XLF and EEM, to there's been a lot of sector rotation. People are trying to, as things have calmed down.
You mentioned you're seeing a lot of interest from institutions right now. If you could kind of break it down for our audience a little bit, you kind of mentioned the products they're interested in. What in general are you hearing from these institutional clientele out there right now? Are they coming to you saying, hey, we want assistance really getting long out there? We're looking for more long exposure to the broad market. Are we looking for perhaps short exposure to volatility? If there was one aggregate trend you could kind of label across the broad variety of activity you're hearing and seeing over there, what would you say it is, ILYA?
I would say in the past 2 or 3 more interest in, especially for people who've become more defensive and reduced exposure in their portfolios, to add exposure synthetically via selling puts or buying call spreads, or initiating just option trades, which would add exposure, perhaps allowing for a little bit of a pullback from the current rally. But still, it's in line with the positioning reduction we've seen, because, in the ETF world, also in the fund world, we've seen, trillions of dollars go into cash, basically since from February to the beginning of April. So, a lot of people have really de-risked, especially going into the last 2 or 3 weeks. I think the sell side was pretty bearishly positioned, and so was the buy side. So there's been interest in trying to use options as kind of as a synthetic tool to get longer, to increase exposure. That's kind of been the theme. Less so hedging conversations right now.
So synthetics to get long, and not really calling up to say, hey, hedge me. I'm worried about this downside. That's kind of interesting. Another development we've talked about a lot on this program and on many others on the network over the course of the past month has just been the extreme liquidity concerns people have had out there in the marketplace right now. Spreads getting wide, displayed liquidity getting pretty small. Volume still managing to hold up, but it's getting harder to find. And particularly, you get beyond those top 50 names or so out there, and liquidity is kind of like a desert out there. You guys pretty much specialize in helping people find liquidity. It's a challenge on a normal market, but I'm curious for you guys, as you're out there trying to help people execute right now, what's it been like over the course of the past month trying to get out there and source options liquidity for clientele? How hard has that been, ILYA?
It's not easy. It's not easy, especially when you move beyond the most actively traded names. I would say, the most liquid ETFs, the most liquid options like Microsoft, Apple, things are still pretty good. But once you move beyond that, the screen markets have been fairly wide. It's also been hard to cross things. For example, it's been hard to cross something even with a low delta, with the floors closed, and so forth. So it's definitely been challenging. And, you can see it's hard to improve some of the wider screen markets. And, when the trades also come in with heavy deltas and the market is swinging, 3 or 4% intraday, it's tough for people to provide liquidity in that environment.
Yeah, these are definitely challenging markets, I think, to put it euphemistically at the very least. All right, let's keep going around the horn here. Shelly, you're up next here. I love that you're staring right at me. It's freaking me out, which is great. I love it. But Shelly, what's been lighting up your tape since the last time we chatted here? Obviously, it's been busy times. We talked on the last show, beginning of the month, about how MIAX doing pretty strong numbers out here, despite the fact that things are pretty fragmented, pretty crazy. So what's been lighting up your tape since the last time we spoke, sir?
Well, it's been relatively quiet for us as an exchange. Obviously, we're very busy. Quote volumes are down from their peak. We went through an expiration cycle with spikes and VIX this week. That went very smoothly. It's been relatively quiet from an exchange perspective, given the amount of volatility that's still taking place in the marketplace.
Interesting. Have you noticed any issues, or do you have any concerns? I mean, I know we talked a while ago. You were kind of sharing my concerns about just how fragmented things have become in the option space. Are you still concerned about that? Have you noticed a bit of a lessening? What are you seeing out there?
Problems now are not so much the fragmentation. It's just the fact that, markets are wider because things are moving a lot, and, vol is also moving a lot. So I think a lot of these problems we would have seen, with or without fragmentation. And I think that's why we've seen a lot of concentration in the top options. You see a lot of volume concentrated in SPY, XLF, Microsoft, Apple, and a lot of it is in very short-dated options, because gamma has been very much in focus in an environment like this. Remember, people forgot about gamma for a number of years. People only cared about delta. And gamma actually came into play in the last 2 months. And so you're seeing a lot more back and forth in very short-dated options, vertical spreads, things expiring even in 1 day or a few days. That's really lighting up the tape.
Good point. I like that. People forgot about gamma. Shelly, are you seeing something similar over there on MIAX? Not so much forgetting about gamma, but just in general, somewhat, I won't say, resumption of our old liquidity regime, because they're not quite there yet. But are you seeing some of your concerns maybe mitigating a bit over the past couple of weeks?
Well, I'd say markets are getting better. They were very, very wide there for a few weeks, and obviously understand why, given the volatility, both intraday volatility and overnight volatility. But it's interesting, and kind of speaking to Ilya's point, we've had a lot of calls from firms, both on the broker side and the market maker side, talking about how trades are being done in this all-electronic environment. I think it's exposed some of the practices that have taken place on the trading floors historically. The ability to potentially enter an order cross only or cross a minimum percentage, things that aren't allowed electronically. I think it's exposed some practices in the industry that we're going to have to examine going forward. Again, I've got brokers calling and saying, how can I do this? I've got market makers calling and saying, I'm seeing this. Is this legal? Is this right? How would your exchange handle it? So it's opening up some very interesting trade mechanism issues. Not so much liquidity issues, but how do you do business in an electronic marketplace to mimic what has been done on the trading floors? And has what has been done on the trading floors been truly transparent and within the rules?
That's a good point. We kind of take for granted all the things that used to go up down there, and you're right, different ways of crossing things and things like that you could get done in that type of environment that may be a little bit more difficult or perhaps a little bit more eyebrow-raising in the electronic environment. Tom, same question for you. You're the volatility specialist over there at MIAX these days. A lot going on in the volatility realm. What's been lighting up your tape these days, sir?
What's been lighting up my tape? Well, like Shelly said, we just had the expiration, the settlement this past week, this week, which went very orderly. Some things I'm looking at and people I've talked to, just, a lot of attention to, implied correlation, still pretty elevated, around that 65, 70-ish level. I'm looking at 3-month S&P. That's, we're still looking at a macro kind of tape, macro environment. And I know, we've had some earnings coming through, everything like that, but the tape is still much more macro concerned, in my opinion. I think a lot of the vol players out there are, there's still the curve trades that are going through. You still, on the term structure of whether it's VIX futures or spikes combos, you still have that, that blip pointing out there in October. What else is on the radar? I think one area that's pretty interesting right now is Russell. Russell realized volatility, Russell implied volatilities versus whether it's S&P or whether NASDAQ. Just very, very inflated, both in a realized and an implied form. So I would imagine people are trying to take advantage of that or trying to position for that. One of the things I'm hearing too from just in chatter is that in the OTC market, clients out there, involved, still unwinding some long variance positions. So I would imagine that's, helping to keep a little bit of, pressure on the skew overall. And just, I'm kind of going on a tangent here, but, looking at the put call ratio on the index side, it seems pretty dampened relative. And on the macro environment, on the macro, the composite, it looks very, kind of orderly, so very, very average. So those are, some kind of interesting highlights that I'm seeing out there that are catching my eye.
Interesting stuff. Always like hearing about the OTC, what the OTC folks are up to out there, because so much we talk about all day. We talk about primarily listed volatility on this show, but so much of that has its counterpart and its offsetting trade and the other leg of it in the OTC realm. So it's always fun to get a little bit more color on what's going up there. And speaking of what's going up, Mr. Meatball, sir, what is going up in the crazy world of the Pit Chat? What are your crazies trading? What is your vol trading club up to? And what has been lighting up your tape since the last time we spoke, sir?
I mean, there's a lot going on. I think the big talk is the slow relaxation of realized volatility. We're now going to have, are we heading for 3 days in a row of sub 2% moves? We're definitely going to be sub 2% 2 days in a row right now. I think people have been really interested in the lack of diversification developing in the major indices. As we're trading and trying to invest and figure out, what do we buy, what do we sell? A lot of guys are looking at the S&P 500 and saying to themselves, boy, 5 stocks make up a quarter of this index. They're looking at the triple Qs and saying 5 stocks make up half the index. It's a weird place when the most diversified index is the Dow Jones Industrial Average, which takes a whopping 10 of its 30 stocks to get to a 50% weighting. And so I'm really been watching that. We're watching VVIX start to VVIX / the Viking slowly pull back. And the VIX, I'm really paying close attention to what it does today, what VIX and spikes do today, because, we've got a day where kind of an inside day into a weekend, and those indexes seem kind of firm, which is eyebrow raising, especially given the Gilead news. Is it Gilead or Gilead?
I say Gilead, but I've heard it both ways.
All right. Well, so Gilead, I would have thought that Gilead news would have been driven us more. 3 weeks ago, we would have been up 10%. 4 weeks ago, we would have been coming off a terrible day, but we've been up 10%. And so I'm really kind of fascinated by kind of what the rest of today looks like and what vol does, because I think that's going to kind of set the tone for next week.
Yeah, you're right. And that's something I was paying attention to. A lot of people have been watching today, because how long have we been talking about this much rumored, much hoped for, quote unquote, cure rally, right? That was the thing that was really going to be the catalyst. If we're going to have a V-shaped recovery, something along these lines that could directly mitigate the effects of the virus would seem to be the thing. That would just send us off back into the stratosphere. Of course, we have had a pretty V-shaped recovery already, so probably some of that having to do with the reason why we're not up 10%, because you're right. If we had this news that come out on the days when we were hitting circuit breakers day after day, we would have been up 10%, if not more. Who knows? We would have hit all the circuit breakers that day to the upside. So it would have been a crazy town out there. Today, not so much. Like I said, about 1.5%, a little more in the Dow, a lot less in the NASDAQ out there. So maybe some people also thinking, hey, despite the fact that we are mitigating new cases, the damage that's already been done to the economy is very real. I mean, Tom was just talking about small caps. We talked a lot about that on TWIFO the other day, the small cap volatility. Small caps have been leading the markets down, leading the markets back up. The volatility has been through the roof because it's like an atom bomb went off in the small cap and indeed the small business end of the economy. And it's hard to see, even with the cure, it's hard to see a lot of that stuff coming back and returning to normalcy anytime soon. And let's get out to see what the vol products are showing us. Like now, we said they're both at about a 39 coming into showtime. The futures out there in VIX land coming into showtime. Where again, we're talking cure. We're talking perhaps potential cure, I should say, because we don't really know yet. But still, the hope, the optimism is there. Yet, VIX still backward. Cash still pretty firm, not quite as firm as it was a wee bit ago out there, but still about 3.5 points above the front month future coming into showtime. And we saw, looks like about 5 points or so from the June future to the cash coming into the start of the show. So still pretty firmly backward. ILYA, I know you said you guys look at the ETFs a lot out there. Do you guys spend any time looking at the VIX futures term structure? And if so, has the extreme nature of the backwardation we saw, and of course for a while there, that also extreme disconnect between the cash and the futures. Has any of this come across your radar of late, ILYA?
Yeah, people have been very focused on that. And, when we were crazy, we had the April future was front, and then the June future, that spread was as much as minus 20 points. And, I think the reason for that is that, with the movement, you had to price even a 1 week straddle in the S&P at about 4 something percent. So you had to have it way above 40 vol. And so that kind of drove the front end of the term structure. And then, the expectation back then was that, we would reopen the economy at least partially by June. So if you looked at the June future, it was kind of oscillating in the high 30s with 40, low 40s being the resistance. And it wasn't really hedging you very much if you were short the front because it had that cap on it. And so, when the front was crazy, you had that backwardation to, minus 20 April, June. And, as the market rallied and things calmed down and realized volatility has fallen, the front has come in to where it's now pretty much trading, not too far away. All right. But, you're still a little bit backwardated because I think that the expectation is we're going to move away from here. We've hit a very interesting level today. We were right around this, just above this 28.75 level. And, that's kind of where we failed on the S&P futures around March 10th and March 11th. And, people obviously got long vol wrongly in the last week or so because a lot of the sell-side research reports said, it's a no-brainer if you can buy, high 30s vol because the SPX is guaranteed to realize, more than 40. And, we only realized 30 vol in the last 4 days. I mean, the last time we moved more than was April 6th. So, those who bought gamma sitting on losses, liquidating. And, I think we've seen a little bit of short covering coming in for people who were on the right side. They're kind of nibbling as the VIX has declined below 40. And so, we have a more normal term structure, but I think people are still looking for us not to stay here, but to kind of move away from current levels, which, makes a time spread. If you buy a calendar spread and you're backing in, a vol credit, the problem is if we quickly move away from the current point, that time spread is still going to lose. So I think that results in still a slight inversion.
Yeah, we've been talking about that for a while, how you could roll down through the term structure for pretty hefty credits for quite a while there. It's much less than it was, and you're right, there are still obviously lingering potential risks with that, but it is interesting to see just exactly how we're shaping up out there. Speaking of shaping up, let's look at how the options are shaping up out there. Let's start in Spike's land. The Spike's OI are pretty similar to last week. The big position, of course, which was the 1x2, the April 17, 25 1x2. Well, it went off the board. Listeners, went off on the 15th. Actually. So that was 35,500 by 17,700. It looks like our friend or friends out there haven't decided yet if they're going to put it back on, and if so, how. I mean, they left actually a fair amount on, which is kind of interesting. Because, well, actually, I'll ask you guys. You guys probably would know. Tom, did you know if our friend here on the 1x2 side, did he carry all the way through expiration? Did he close it out prior to that, sir?
Let me get back on. Am I unmuted? Okay, great. I believe the open interest was the full position going into the print, and obviously that open interest has disappeared. Didn't see much activity in the days beforehand. So yeah, it looks like it looks like it's just expired based off the settlement price.
Interesting, 'cause that's kind of what I thought too, and a lot of listeners had been asking us about that. It's like, how come the 1x2 folks aren't taking? They took a good chunk of it off, listeners, but didn't take all of it off, even though they had a pretty firm home run on their hands. That's kind of interesting. Someday I wouldn't mind finding out who's trading that and see what else they had going on that maybe made them want to keep that on. Either way, you have a hedge or you have a good trade in this case, and it works out in your favor. Might be an interesting time to take a good chunk of that off. They took some of it off, but not all. Moving on out to VIX options land today. Pretty light. It's been pretty light for a while, actually, which speaks to why the ADV has pretty much fallen off a cliff since our last show. And I remember that was 2 weeks ago, listeners. So it was about 1 million or so contracts last show. Now it's about 552,000. So it's down to almost 50% from last show. So again, the volume in VIX land coming back to somewhat more normal levels. And today, again, like I said, coming to showtime was about 131,000 contracts. So not a ton of paper on the tape out there. Let's see what the top positions are out there in VIX options land right now. Number 10, we got the May 17 puts, 95,000. Only cost you 95,000 contracts to break into the top 10 in VIX land. And that shows you perhaps how quiet things are becoming, at least compared to a few weeks ago. Number 9, the May 40 puts with 98,000. Number 8, also 98,000 of the May 13 puts. Seen a bit of a trend? Number 7, the May 45 calls, $1.02 on the tape. Number 6, May 60 calls. Those seem outlandish now. they were in the money not too long ago. May 60 calls, 112 out there. Number 5, the July 28, 113,000. Number 4, June 15 puts, about 118,000. Number 3, May 32 halves, 119,000. Number 2 here, May 28, $1.26 on the tape. And the number 1 position out there in VIX land, still a call, despite what we're seeing out there, still a call with the May 20 calls out there doing, about 148,000 total contracts open. So yeah, looks like it's about 60% calls and 40% puts out there in the top 10 today. Let's move on out to what's been trading out here this week. Like I said, kind of a quiet week. Today, a quiet day, only 131,000 contracts on the tape. The big trades out there are actually the May 72 halves, going up about 11,600 times total today. So May 72 halves. Let's hope they're taking off something that looked pretty good. Probably could have taken it off earlier and looked a little better, but let's hope that's closing at least for a little bit of profit. And we got about 10,000 each of the SEP 13 and 15 puts. Looks like maybe a vertical going up out there as well. But again, not a ton of paper out there to really parse today. Going back to Thursday, a little bit more paper. About 192,000 contracts. The big trade out there, it looks like it was, the big individual option was the July 30 puts going up 21,000 times. And it looks like there was a bit of a funky risk reversal / strangle. You can parse it a couple of different ways. Went up 15,000 times was July 22 puts going up pretty much right off the bid against the July 40-45 vertical at also 15,000 times. So obviously 45,000 contracts total in this one print. That vertical went up for about $1. Looks like they maybe sold the vertical and sold the puts, which is why I say maybe a strangle. Looks like they maybe picked up the calls. Actually, no, the 40 calls. So it looks like they maybe a risk reversal then. It's like they bought the 40 calls. Maybe a bit of a bullish risk reversal out there. So maybe someone out there thinking perhaps the worst is not past us out here. Interesting stuff out there. Also saw 10,000, like we said, the July 30 puts. Those were the big prints out there. 10,000 of those going up pretty much exactly mid-market, 10,000 times. Wednesday, a little bit more active out there. 461,000 contracts to big trades on the day. 68,000 total of the May 60s lighting it up, followed by 36,000 of the 45s in May and 32,000 of the 75s. Looks like it's part of this funky call fly. There was one print of it went up, the May 45, 60, 75 call fly went up 11,860 by 23,720 times total, obviously of about 2x that when you start factoring in, even not more, all the volume that went up on the day. So someone liking the 45, 60, 75 call fly, 1 by 2 by 1. Kind of interesting. That looks like they were buying the fly, though. So a couple of prints on a couple of days. Maybe looking or hedging or speculating that perhaps the worst is not behind us here, at least from a vol perspective. Tuesday, a lot more paper, 649,000 contracts, the big print out there, 42,000 of the SEP 20 puts and 40,000 of the May 29 puts. Looks like there was a bit of a May put vertical that out there as well. The May 29, 32 half put spread went up Looks like on a ratio, about 40,000 times for the 29 puts against 26,300 of the May 32 half puts. Also worth noting, looks like the 20 puts in September traded a couple of different prints of 20,000 each. So that's where that big 40-odd thousand lot came from. And Monday, decently active day, but not a ton of paper out there. The big prints out there looks like 32,000 of the April 40 puts and about 30,000 of the April 42 half puts. And so maybe a bit of a vertical out there as well. Mr. Meatball, I know your crazies in the pitch chat are hanging their hats out there in VIX options a lot these days, as well as some other products. What's in this somewhat quieter week of activity? What was lighting up your tape out here? What caught your eye in VIX options land this week, sir?
Yeah, I'm just continue to be fascinated by how expensive downside is. That's kind of been everything I've been trading off of is I don't know why anybody would want to pay 65 cents for the May 25 puts, but if they do, I'm happy to sell them. Same thing in the spike index. Downside vol is really expensive compared to kind of everything else that you would normally see, and that's really the key of everything is that that downside is just absolutely been fascinating.
Yeah, how often can we say that the puts are a bit up extremely? Obviously, usually it's the opposite in the vol products. Let's keep going around the horn. Let's head on out to the VXX land, where we see about, VXX down a healthy percentage from last show. Again, that was 2 weeks on, listeners, so we're a little bit shy of the 40 handle out there in VXX right now. It puts it down about a little over 7.5 handles from last show. Today, coming into showtime, we have about, 204,000 contracts on the tape. The ADV, much less than it has been, about 301,000 out there. Before I break down the top 10 positions out here, Mr. Meatball, same question for you. I know a lot of your crazies like themselves some VXX. It's been turbulent waters of late out there, a little bit less so this past week. What's been catching your eye out there in VXX land, sir?
Yeah, it's been interesting. That has not been nearly as volatile the last couple of days. That it's been this fight between the last week or so. It's been a fight between it.
Hi, I think I lost
vol dropping and contango or backwardation kind of pulling it up. And this week in particular, vol's been stiffer, significantly stiffer, and that's been the other piece of everything we've been seeing. So there's been I think a lot of guys asking me, hey, what do you think about buying long-term puts in this thing? And I'm like, well, not yet. Although again, I would note that the implied volatility in all of the ETFs, in VIX, the ETPs, in spikes, starting to ease back a little bit. And if it is bid up, it's mostly on the downside. Upside is not nearly as exciting right now as downside.
It's that time of year again, which is great. We'll get Matt back on from ORAT soon to break down all the crazy vol that we're seeing out there because, it's earnings season. And, it may not seem like it with crazy macro concerns still dominating the headlines out there, but there are a lot of micro concerns, and we are seeing some interesting things because this is our first real glimpse into the actual economic damage that we're seeing in a lot of these companies. It's all been speculative prior to this. Now we're seeing the actual numbers come out, and a lot of big names are reporting so far this week. Beginning of the week, we had, of course, the financials really kicking it off. We had Wells Fargo, we had Goldman, we had JP Morgan, PNC, Bank of America, Citi. I had, of course, retail names as well, like Bed Bath & Beyond. We had some research-oriented names like Johnson & Johnson and Abbott Labs, Rite Aid, BlackRock, you name it. A broad spectrum of financial and, indeed, healthcare-related names this week, which is kind of interesting out there. Of course, if you want to see the full breakdown for yourselves, listeners, theoptionsinsider.com is the place to go. We got the earnings move and starting to get the earnings move results reports as well, because now we have, of course, the actual movements to parse and break down out there. I'll give you a couple really quickly. Let's see, Abbott Labs is one everyone's been talking about. They're a local lab out here that has accelerated testing. It seems like they had earnings on the 16th. They were pricing in, they're expecting about 4% move with their straddle. They were pricing in, they closed at about 90, almost $91 going into the report, and they delivered about 2%. So underperforming, which is kind of interesting out there. Let's see, BlackRock, another one. They were pricing in, they were at $443. They were pricing in about 3%, and they actually delivered about 2.2% actually out there. Again, this is as a snapshot as of the time of the report, so they could have moved more intraday. But at the time of the report, right after the earnings blush, you could see all these numbers for yourself. And that seems to be a theme, actually, which is kind of interesting. You might think people would be pricing in a lot more volatility, given the fact of all the other shoes waiting to drop this cycle. Yet we've seen a lot of names actually underpricing compared to recent moves from an overall volatility perspective, which is kind of fascinating and perhaps a little counterintuitive. If you guys want to see the full reports for yourselves, the whole breadth of them, like we said, theoptionsinsider.com. Got the earnings season report up there too. Obviously, it's still pretty new. It's just getting filled out. There's names just starting to report. But as we get more names reporting, we'll start updating that report with more numbers, and we'll see how the season is trending. Meanwhile, you guys have a lot of questions on the brain, so let's get to some of you guys, a little bit of your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Volatility Voicemail. This is the portion of the show where you guys take the reins, your questions, your comments. I know you guys have a ton of them. We've been trying to filter as many of you onto the various shows on the network over the past few weeks as possible. See how many we can squeeze on here today. Let's start off. Nick, we got a couple of them, Nick, here, looks like. We'll take them in order and see how many we can get to. Nick wants to know, first off, everyone's looking at ways to get long now, including stock substitution strategies like the fig leaf. He's referring to the strategy that Brian always talks about on Options Playbook Radio, which involves stock substitution with a covered call component as well. But he goes on to write, but why does no one talk about stock substitution in volatility products? Or I guess it would be future substitution. I like that instead. Great show. Well, thank you, Nick. This is an interesting question. That's not a strategy we throw out there a lot. So maybe we'll start with Tom. Tom, you were, before you were a vol specialist over there in MIAX land, you actually hung your hat on the vol trading side of the fence. Is this something people inquired about a lot, or that you utilize a lot, the old quote-unquote stock substitution strategy? And, of course, for listeners who don't know what we're talking about a little bit longer term, probably at least 6 months, and a little bit more in-the-money call, usually around at least 75 deltas or so. Was this a strategy that you or your clients utilize a lot out there, Tom?
From what I recall, I didn't see too much of that on the volatility indexes per se, but more in the shorter term, people would do trades where they use options to express direction, whether it's volatility or not. There was always the selling call spreads and buying puts. People would do that to play some kind of roll down trades. There's a lot of different types of strategies like that, but nothing that I recall specifically with the longer dated kind of that type of strategy. But certainly directional views based on the vol levels, people would either would move it to puts or calls, or call spreads, put spreads, the usual stuff. But so. All
right, let's see if the third time is indeed the charm. ILYA, do we indeed have you back, sir? And if so, are you seeing a lot of demand for broad stock substitution? Could be in the indices, or as our listener wants to know, Nick, in the vol products. Are you seeing these, ILYA?
This is the thing. We haven't seen a lot of people doing the money calls and, kind of futures type substitution, because the environment has been one where rates at the short end are zero, and 1 month LIBOR has really come in. So, if you substitute an asset that's paying you, a 2% or more dividend yield with something that's paying you zero on cash, you're actually losing a lot of carry. So, it's actually paid to be long ETFs and, stock. and just buy puts instead of buying the in-the-money call. And a lot of times, given the way the funding is set up for a lot of people, especially maybe the caller, we do trade a lot of RevCon, which, for your listeners is basically a synthetic forward. So, instead of buying stock, you can buy a call and sell a put at the same strike. And we kind of often trade that for institutions as a package where we trade the stock versus the synthetic forward. So we've been very active in that. That's been a big area of ours. And that's used to, obviously, if you need to free up balance sheets, so you can get rid of stock. But it's, for the most part, it's been paid to be long stock and short the forward because of the interest rate situation. We get another drop in 1 month LIBOR. But one opportunity people should look at is because we have extremely high skew, right? I mean, the S&P, you have 15 vol points between a 10% out of the money call and 10% out of the money put, and a lot of skew in the names. So you can buy an out of the money call a little bit longer dated, at least like maybe 3 months or so, and sell the put and collect a fair amount of premium. And what you have is really a synthetic forward. So, that to take advantage of the skew has actually made sense a lot of times to buy the dip.
Yeah, I'm always a fan of a good bullish risk reversal, and in a lot of names right now, you're right, those setups are looking pretty favorable. And this is a challenging time for stock/future substitution, as you rightly pointed out there, ILYA, not the least of which, of course, spreads, you start going farther out. Still a little wide, a little dangerous, and of course, the vol is coming in, but it is still pricey to get those longer-term contracts out there. So all of that not exactly favorable for those scenarios. Let's keep moving, see how many others we can squeeze on here. Helene Meisler chiming in saying the VIX is under its 50-day moving average for the first time in months. We don't talk a lot of VIX technical analysis out here. I'll have to go check and see if that's indeed the case. I'm not one to mistrust our listeners here, but that could indeed be the case. Nick has another one. It says, I'm only trading weeklies right now to avoid weekend volatility. Am I being paranoid? Well, Mr. Meatball, a couple of questions we could pack in there. First off, do you agree maybe not an ideal time for a stock/future substitution strategy in a lot of products? And then B, do you agree with Nick's other question here or comment that he's avoiding weekend risk across the board? You think that's a good play, sir?
I mean, I think that there are smart ways to take on weekend risk and be able to take advantage of the high vol right now. I was meeting with a client today. I think the single best trade out there right now is short time spreads, taking advantage of realized volatility, selling long-term Vega. For those that are interested in like stock investors more than trading, I look at the SPY 200 puts and $8 seems like a decent sale, and similar to SPX. And so if you're unwilling to sell that kind of long-term Vega, you're missing out on a lot of opportunity. We don't see long-dated vol get this high, but once every 10 years. So if you're not willing to sell premium a year out, 2 years out, you are missing out on once in a decade opportunity. By the time we see vol do what it's doing right now, Shelly's going to be living in some island off of the, island off of Capri. You'll be a satellite network. I'll be retired and living on South Padre Island. It's going to be that long. So think of things in that perspective. This is a once a decade type of trading environment.
I like it. I like the idea of Shelly on an island like a Roman emperor of old. I like it. All right, we have a lot more questions. We have to keep rolling with the show, listeners. Right on into our final segment, the most difficult, the most dangerous part. Yes, it's time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball. And again, we had no show last week, so when we predicted our vol for 2 weeks ago, we predicted for 1 week, forgetting that was indeed a holiday in the interim there. So we all prognosticated last time. We had actually Tom looking pretty prescient at about a 41. Mr. Meatball's at 41.38. Simon was at a 46. and I was at a little bit higher, 54. It turns out we saw VIX and spikes. Again, there was no action. They were both closed on the show for last Friday, so they both closed on Thursday at about 41.70 or so, 41.67 on the VIX and 41.78 on the spike. So that puts Mr. Meatball actually within about a third to a fourth of a point, depending on where you're looking on which index. Mr. Meatball, I will give you pride of place. Do you want to go first, or do you want to maybe pick someone else to go first?
I'll go last, and I'll let you go first if you like, Mr. Longo.
I could go first, and I usually like to, but when we have a guest, I like to be charitable. So I will allow our guest, Mr. ILYA. ILYA, if you're not familiar, this is the portion of the show where we attempt to try to prognosticate what the heck's going to be happening in volatility this time next week. So at the close of the show, right around 2 o'clock Central, 3 Eastern, this time next week. So ILYA, if you have a speculation in mind, could be for VIX, could be for SPICE, could be for something else, of where you think those indices will be a week from now, have at it, sir.
Oh, my guess is the VIX will be somewhere around 42.
Well, I like
Look at that. Wow. Straight, he came prepared, straight up. Not balking at all. 42 there for ILYA. I like it. And Tom, since you were a pretty close second last time, I'll let you go second now as well. Tom, what are you feeling for this time next week from a SPICEs and indeed a VIX perspective, sir?
Okay, well, in full disclosure, these are my own opinions and not that of the exchange, just to put that out there. But I think I used that term dampening last time, and I think you liked it, but I do think we still see a little more dampening of this, both the realized, and I'm going to go with like a 35-ish number.
35-ish. All right, I like it. I'm going to put you down for a 35-ish. There we go. Out there. And Mark asked to go last, so I will go next here. You know, lately, it was looking pretty good. Beginning of the year, I was unerringly precise in my guesses, and then, fell into a little bit of the Russell Rhodes role over the last few episodes where I was getting higher in the vol space. I wasn't feeling this fade, and of course, I've been off the last couple of weeks. As a result, I should mention, by the way, listeners, coming at the end of the show here, we're seeing both VIX, cash, and spikes right around a 39.5 or so out there. So that's kind of where we're lining up right now. So we got ILYA saying a little bit more here to the upside out here, and Tom going a little bit lower. That's what I get for letting ILYA go first. I was feeling a little bit more, not a ton, a little bit more. So ILYA's kind of right where I like. So tell you what, I'll give him a little bit of breathing room. And I'm going to say we have a little bit less upside. Well, kind of almost unched, about a point higher. I'm going to say we're at a 40.5 this time next week. So staying a little bit firm, gaining a point, but not a huge amount of net movement on the week. All right, Mr. Meatball, I bought you as much time as I possibly could, sir. The floor is yours. What are you feeling for this time next week?
38.12.
38.12. Look at you. All sorts of precision involved. There's a 38.12. All right, so listeners, I'll break down our market for you here. We got Tom on the downside at a 35-ish. And then we've got Mr. Meatball coming right behind him, 38.12. Then me at about a 40.5. And ILYA playing the top spot there at a whopping 42. All right, everybody. That music means, unfortunately, we've come to the end of an epic sojourn through the world of volatility. If you guys need more volatility in your air holes, I encourage you. If you're interested on the earnings side, you want to check out more tickers, theoptionsinsider.com is the place to go. Click on that Options, News, and Articles tab. Top right corner, you'll get all the reports. As soon as we have them, we put them up for you. So you guys can see. I know you guys like that stuff this time of year, especially. So stay tuned for that. You can do your own earnings volatility analysis. Pick a ticker. I don't care which one it is. If it's coming up in the near future or already reported, it's going to be up there. We don't have time to do even a fraction of the ones that are. We'd probably do a whole earnings volatility show if we wanted. So check them out for yourselves, theoptionsinsider.com. Meanwhile, let's go around the horn. Let's start with our guest, ILYA. If folks are intrigued, they want to learn more, maybe they need some help, and I think we all could use a little help with execution in these trying times, sir. Where should they go? What should they do? All right, so it looks like the magic of technology not holding up for us yet again. Check them out for yourselves, their listeners. WALLACHBETH.com. That's WALLACHBETH.com. WALLACHBETH.com to learn more. And Mr. Shelley, sir, same question for you. If folks are intrigued, they want to see what's going on. Maybe they have a question about the Spikes futures. Maybe they want to know what's going on in MIAX in general. Where should they go? What should they do, Shelley?
Visit our website at MIAXoptions.com. Click on the spikes in the header, or MIAXoptions.com/spikes.
There you go. Pretty easy. If you get to that page, you'll find a lot of good stuff there, including the most recent market data for spikes, settlement prices, analytics, a very snazzy little 2-minute or so video at the top explaining what the heck spikes is, links to a cool show called Volatility Views. You might like it, and a lot more stuff. So MIAXoptions.com/spikes is the place to go. And last but not least, Mr. Meatball, if I made it all the way through an hour of Volatility Views, it means I'm probably pretty hardcore in the vol space, and I might probably want a little bit more of volatility trading talk and analysis and webinars and those sorts of things. Maybe a cool vol trading club. If so, where should I go? What should I do?
Yeah, come to optionpit.com and sign up for our newsletter services and everything that we offer. We're going to be doing all kinds of cool stuff in the next few days and weeks. You do not want to miss out. I believe on the 28th, I'm going to be doing a presentation. So just make sure you've come to check everything out.
There you go. Optionpit.com is the place to go. And on behalf of ILYA and Tom and Shelley and the Greasy Meatball and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for keeping those questions coming. We love to hear from you. And we'll see you next time for more Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the Spikes Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with Spikes. Learn more about Spikes at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.